All right, let's get into it. Today, we are handing you the ultimate cheat code for one of the toughest boss levels in your entire audit and risk exam, accounting estimates. Seriously, forget the grind, it is time to learn the system.
You know that feeling, right? Your eyes scan the exam paper and bam, there it is, a question about some ridiculously subjective provision. Your heart starts pounding, your palms get all sweaty, it feels like you're being asked to guess the number of jelly beans in a jar the size of a planet.
Like, where do you even begin? What are the magic words the marker is actually looking for? It just feels impossible. But what if I told you there's a repeatable, logical structure that turns that pure panic into pure, unadulterated points? That's right. You are about to download the cheat code. It's called ISA 540, and it's the framework that turns any accounting estimate question from a wild guess into a guaranteed high-scoring answer. Okay, but before we start mashing buttons, we gotta learn the basic controls. I mean, every great player knows the game mechanics, right? So first things first, what exactly is an accounting estimate?
Well, according to the standards, it's pretty much any amount in the financial statements that can't be measured precisely. So management has to use their judgment to just come up with a number. We're talking about stuff like warranty provisions, goodwill impairment, or the fair value of some wacky financial instrument. It is all about educated guessing.
And these guesses, they're dangerous because of 4 inherent risk factors. I want you to think of them as the mini-bosses you have to defeat. You've got estimation uncertainty, complexity, subjectivity, and, well, the sneakiest of them all, management bias. These are the things that can really cause a material misstatement.
So, let's make these concepts stick. Estimation uncertainty? That's all about how hard it is to predict the future. You know, like trying to guess the failure rate on Rick's totally untested interdimensional doors. You just can't know for sure. Management bias, on the other hand, that's when management isn't exactly neutral. It can be intentional or not. Kind of like Jerry's hopeless optimism about his ad agency, which, could lead him to understate a provision or overstate an asset.
All right, controls learned. Now for the level map. This is your guide, your walkthrough for any exam question on estimates. It's a simple 5-step combo that will get you from 0 to full marks. Let's break down the combo. Step 1, identify the estimate and its specific risks. Yeah, those mini-bosses we just met. Step 2, understand how management actually came up with their number. Step 3, choose your weapon, your testing approach. Step 4, perform the actual audit procedures. And finally, Step 5, evaluate the evidence and conclude. That's it. That is the whole game. Let's zoom in a little on Step 3, choosing your path. ISA 540 gives you 3 main weapons. Now, if management's controls are strong and the risks are low, you can test their process. But if risks are high, like with a biased or super uncertain estimate, you're going to want to develop your own independent estimate. And sometimes, the absolute best evidence comes from just seeing what actually happened after year-end by testing subsequent events. The key here, and listen up, is to always match your weapon to the risk you found in Step 1.
All right, gear up. It is time for our first boss battle. The scenario is a warranty provision, and the task word from the examiner is evaluate. All this means is we need to assess if management's number is reasonable, using our professional judgment.
So the company is Rick's interdimensional plumbus. The estimate is the warranty provision. Now just look at Rick's method. 2% of sales based on old data from a dimension where things apparently didn't explode as often. And this, my friends, is a perfect example of our key risk factor, massive estimation uncertainty, because the new plumbus are completely unpredictable.
Okay, let's apply the cheat code. Step 1, we've identified high estimation uncertainty. This is a significant risk. Step 2, we understand Rick's process is based on totally irrelevant data. So for Step 3, because the risk is so high and the process is so weak, we are not going to test it. Instead, we'll develop our own independent expectation. Step 4, we perform the procedure. And here's the key part. To address that huge estimation uncertainty, we get the actual post-year-end failure data from Mr. Poopy Butthole's reports, and we recalculate a more accurate provision. So finally, Step 5, we evaluate. Our calculation gives us a range, and Rick's 2% is way below it. It is not reasonable, and we'd probably suspect a potential management bias here to make profits look better. Boom, full marks. Next up, Boss Battle 2. And this one is tougher. Goodwill impairment. And the task word is design procedures. This means we need to come up with specific, really detailed audit steps.
So here's the setup. Beth's super successful vet clinic bought Jerry's failing ad agency, which created goodwill on the balance sheet. Now, to test for impairment, Jerry has prepared a cash flow forecast assuming 50% annual growth. I think we can all agree that sounds a little optimistic. The biggest red flag here is just the massive risk of management bias.
So let's focus on step 4, designing some pro-gamer procedures. To directly challenge Jerry's potential bias, we need to challenge that ridiculous 50% growth assumption by comparing it to industry data. To test how sensitive the model is to that bias, we perform a sensitivity analysis. Then we assess the discount rate. Is it even appropriate for such a high-risk business? We might even need to consult an expert, maybe someone like BirdPerson. And finally, we check the disclosures. Have they been totally transparent about the huge uncertainty here? These are the specific, risk-focused procedures that get you those top marks.
Okay, so we've seen how to win. Now let's talk about how to lose. These are the common exam traps, the instant game over moves you absolutely have to avoid. So, a total noob move is writing something vague like, "I will check the warranty provision." That gets you nothing. A pro move is specific and links right back to the risk. I will recalculate the provision using post-year-end failure rate data to address the high estimation uncertainty. See the difference? Another classic fail is just choosing the wrong approach, like deciding to test management's process when you've already figured out it's completely unreliable. The pro move is always matching your approach to the specific risk level.
All right, let's do a quick final recap of the tool that's going to carry you to victory.
Let's lock in the cheat code. Step 1, identify the risks. Step 2, understand their process. Step 3, choose your testing approach based on those risks. Step 4, perform specific procedures. And Step 5, evaluate the outcome. This is your path. This is it for every single estimate question.
So, the crucial point here is this. You don't need to panic anymore. You have a logical, repeatable structure that you can apply to any scenario that involves an accounting estimate. This isn't about memorizing answers, it's about having a process.
But before we go, I want to leave you with the one single most important pro-gamer move that separates a pass from a merit. You have to always explicitly link your audit procedure back to the specific risk it is addressing. Don't just say what you're doing. You have to say why you're doing it. For example, to address the high risk of management bias, I will perform a sensitivity analysis on the growth rate assumption. That single sentence tells the marker you understand the entire process. It's everything. So, you have the framework, you have the cheat code. The only question left is, are you ready to go get those points? Good luck.